We're going to go over the DSCR basics, submission requirements, how to calculate a DSCR, because some of you may be new to DSCR loans. Also, long-term rentals versus short-term rentals, what the LTV and score requirements are, what you can use for asset docs, eligible property types, and also we'll touch on first-time investors, closing in an LLC, foreign nationals, marketing materials, and I'm actually going to show you some pricing examples as well, because I actually priced some out right before our call. So what is a DSCR loan? Basically, in a nutshell, these are mortgages that are designed to help investors qualify for both purchases and refinances on rental properties only without any personal income docs. So I do want to stress that this is not for owner-occupied properties. This is rental properties only, and we'll cover why here in a second. But we can go up to a max LTV of 80% on purchases and then cash out up to 75%. And guys, I do want to let you know that I have Michelle Wild. She's one of our VPs of our company. She's on the call too, and she's going to be helping me man the chat. So if you guys do have any questions as we're going through the PowerPoint, please go ahead and type them in the Q&A or the chat, and Michelle's going to jump in and answer those for you as we go along. So what can you leave out of a DSCR loan submission? So this is actually my favorite part. It's the best part of DSCR. There's no income docs whatsoever. So that means there's going to be no tax returns, no pay stubs, no W-2s, none of that. And you're not even going to put employment on the 1003 either. There's no DTI because we're not calculating income. And there's also no DU or LP or AUS, anything like that to run. So really, really easy as far as documentation goes. So let's go back to the basics. What does DSCR stand for? It stands for debt service coverage ratio. And basically the premise of how we're qualifying these borrowers, since we're not calculating income or DTI, is we're looking at the potential rental income on the property, and we're dividing that by the monthly PITIA. And you may say, what does the A stand for? That's association fees if there's an HOA. And when you divide the rental income by the PITIA, that gives you what we call the debt service coverage ratio. And that is very, very important to know on your loans when you're looking at max LTVs and how much you can qualify them for. So we're going to look at how to do that in a second. But first, I want to go over the submission requirements. So obviously we are going to have a 1003, but you're going to check for the employment that it does not apply. We do want the properties that they own either individually or on LLC listed in the REO section, but you don't need to list expenses or income on those properties because we're not calculating DTI. You're going to pull the credit report into our system, so we'll have that. And then we're looking for them to have a max of 1 times 30 in the past 12 months on both our subject property, if it's a refi, and on where they're living now. And to show that if it's on credit, that's good. If not, we'll need canceled checks or a VOM. Also, I like to point out that if they're rent-free, that is going to require an exception, which they do make that exception a lot of the time. So I don't want to, if you have a scenario where they're currently rent-free, let me know. But that rent-free exception would not be needed if they recently sold their home to purchase a new one, or they own their primary free and clear. So we're also going to need 30 days of asset statements on what we're using for reserves or funds to close. If it's a lease, we're also going to, if it's a refinance, we're also going to need to know what they're renting it for now. So we would need the lease. If it's a purchase, it's fine. If it's vacant. By the way, we're also okay with vacant properties on refis if they were recently rehabbing the property, making improvements for us, and you can show that, then we're okay with refinances being vacant as well. And then of course, if it's a purchase, we're going to need a copy of the contract. Very, very important. Do not include any income docs in the submission. They will probably make you cancel the loan and resubmit it if you accidentally put some tax returns or something in there. So please be sure to leave those out. So who is this loan good for? So the people who would want a DSCR loan would be obviously someone who may not qualify if they're going full doc, maybe because of the way they're doing their taxes. Somebody else would be if they have too many finance properties for Fannie Mae conventional, because, you know, there's a cap on investor occupancies on how many finance properties they can have. DSCR does not have a limit. Also complex income types who just want to avoid all of the documentation. Also borrowers who want to close in an LLC. So if they're closing in an LLC, we'll still need their personal credit. It will be their name on the 1003, but they can close with title in the LLC. And obviously borrowers who are wanting a quicker close time. These are very, very fast. I actually have closed some of these in 3 days from the date submitted. Obviously those had a transferred appraisal with them, but we can close these very, very quickly due to there not being much along the lines of income docs. By the way, if you guys are in our portal and you want to know what our current turn times are, just click on the current turn times button. They update those daily, so you can get a glimpse of how long it would take for a new underwrite or conditions. So all of the DSCR loans are called business purpose loans. And the reason they're called business purpose loans is because the borrowers are using the properties to generate income. So there are some perks that come along with business purpose loans like DSCR. These are not subject to TRID, like no TRID waiting periods or QM. There's no LEs that go out on these whatsoever. No initial disclosure package either, by the way, not from you guys and not from us. And there's no CDs. At closing, these are actually a HUD settlement statement. It's not on the CD form. There's no disclosures whatsoever. So they're, like I said, they're not going to get an initial disclosure package from anyone. You guys should not be sending one out either, because TRID does say if a LE goes out, then you're held to that. The TRID rules will apply. So you guys don't want to send these out either. If they are looking for fees or cash to close, you can print that from our portal. Another big perk of DSCR is you can originate these in state you're not licensed in, as long as the state allows it. And I'm putting on the screen now the states that do not require you to hold an LO license in that state in order to originate DSCR loans there. Orion is nationwide, so we're everywhere, but you personally do not have to have a LO license in the states that are on your screen in order to close an DSCR loan. And like I said, we are going by the state rules, and those are the states that allow this because they're business purpose loans. Also, these loans do not report on the borrower's personal credit, regardless if they're closing in their own name individually or an LLC. So I want you guys to get a calculator if you have one, or grab your phone. We're going to do a couple of examples of how to calculate the DSCR ratio so that you guys are comfortable with it. So remember that to calculate the DSCR, we're taking rental income and we're dividing it by the full PITIA. So on example 1, let's say it's a purchase, and let's say the rent per the rent comp schedule on the appraisal is $2,000 a month, just to keep it simple, and the full payment is $1,600. You're going to divide 2,000 by 1,600, and that will give you 1.25, and that is your DSCR ratio on the loan. A DSCR over 1 means there is a positive cash flow. That's actually a good thing. If the DSCR is under 1, that means that the rent is actually less and not covering the full PITI. We do have programs that go down to a 0 DSCR, no minimum DSCR, and I'm going to show you that as well. A lot of lenders won't go under 1, or maybe they won't go under 0.85, something like that. We do have options with no minimum DSCR. Let's do one more example. So let's say that the rent on the appraisal is $1,200 and your full payment is $1,600. So you're going to divide the $1,200 by 1,600, and that is going to be a 0.75 DSCR ratio. Like I said, if that's under 1, that's a negative cash flow. And you're going to see worse pricing once you go under 1 on the DSCR ratios. If you go under 0.85, you're going to see even worse pricing and more restrictions, but it's good to know that we do have options for those. Generally speaking, the higher the DSCR, the better the pricing. So I want to compare long-term versus short-term rental because that's a common question that we get. So you know the DSCR formula is rental income divided by PITIA. And so we want to know what number, how do we know what number to use here for the rental income in that formula? So if they're using a long-term lease, let's say they have a year lease to qualify versus short-term rentals, those are like Airbnbs, VRBOs, something where they're turning them every couple of days. So if it's a long-term lease, then and it's a purchase, then you're just going to simply go by the market rent per the appraisal. So that keeps it easy. I do want to put like a little footnote, not to confuse you too much, but let's say they're buying a property and we can see on the appraisal that there is already a tenant in there and it's leased under what the market rent is on the appraisal. As long as the tenant is leaving, then we'll still use the market rent per the appraisal. But if let's say their lease continues another 8 months and our buyer is going to be renting to that individual, then that's something we'd have to take a look at and would probably take the lesser of the two. So just a little footnote there. If it's a long-term lease with a refi, we're going to use, that means there's somebody already in the property, they're already renting it. We're going to use the lower of the market rent or lease. Another little footnote, Hey guys, sorry about that. I lost the connection somehow. So let's say that it's a refinance that's already being rented. We're going to go by the lower of the market rent or the lease in most cases. Now, if we're doing a short-term rental, and it's a purchase, then you're going to look at the market rent per the appraisal. And it can actually, most appraisers are not willing to do a short-term rental rent comparison on the appraisal, but if they are, we will take it. So I like to point that out. That's something unique about Orion's program. And then we also have the option to use the most recent 12 months rental history statement from the seller if it's a purchase. Now, a lot of sellers aren't going to be willing to do that, but if they are, that's another option that we can use for short-term rentals on a purchase. We also can use the AirDNA Rentalizer report. A lot of you may have heard about this. You can actually create an account with AirDNA yourself, but if you want to pull a full report, there would be a charge for that. We can use the AirDNA Rentalizer report as long as it comes back that the occupancy rate is 60% or higher, which means that they're not having a high number of vacancies on the property. If it's a short-term rental with a refi, meaning they're already using it as a short-term rental, we can use the market rent per the appraisal based on the long-term or the short-term rental income, or 12 months printouts from Airbnb, VRBO, however they're renting it out, or 12 months bank statements if the subject property is on its own bank account. And again, guys, I do have Michelle on the call. She's a VP with Orion. So if you guys have questions as we go along, feel free to put them in the Q&A and she'll be answering those as we go. So the number that you can use in this calculation for the DSCR rental income divided by the PITIA, for a long-term lease, you're going to use 100%. So you're not getting, it's not like Fannie Mae where you got to take 75%, anything like that. You're going to use the full amount for a long-term lease. If it's a short-term rental, you're going to use 80% of these numbers that we've listed down here. And the reason being is because there are vacancies, there's cleaning fees, there's decorating, stuff like that. So this just to account for some of those other costs. Now, Orion has, and you guys have probably seen this if you've been pricing us, we have multiple DSCR programs. One is called COIN, and it's not like a Bitcoin loan. It actually stands for cash flow only investor. That's what COIN stands for. And then we have our COIN X. They have different guidelines because they are different outlets for us. By the way, we are fully delegated with our DSCR loans. We're not having to send them off for approval or anything. The only time we would need to reach out to the investor is if we're needing an exception to the guidelines. And I don't want you to feel like you have to memorize the differences between the two programs, because if you do have a question or you have a scenario, just call me. We'll go through it together. We'll figure out which one is the best fit for your scenario. But Coin X is the one that you will need to go with if you do want to use short-term rental income for the DSCR calculation. Also, our the minimum DSCR on Coin is 0.85. Coin X is the one that you will want to use if you're below 0.85. And also, first-time investors are allowed on these programs. I want to let you know the difference between first-time investor and first-time home buyer, because there is a distinction there. So a first-time home buyer is someone who has not been on title to any property for at least 12 months in the last 3 years. A first-time investor is someone who maybe they do own their primary, or they have been on title to a home in the last 3 years, but just not an investment property. So there is a distinction there. We only allow first-time home buyers if there is another borrower on the loan who is not a first-time home buyer. But if they're just first-time investor, then Coin will allow that with a DSCR over 1, and then Coin X will allow it with no minimum DSCR ratio with a 680 plus up to 75%. So Coin X actually has no minimum DSCR if they're not a first-time investor, and we'll look at the matrix. But if they are a first-time investor, then you just want to check the guidelines first or call me. We can go over it together. Now, you will find that DSCR loans, no matter where you're going, they do have some additional restrictions and on the low loan amounts. And a lot of lenders won't even go under like 300,000 on DSCR. We go all the way down to 100,000. But once you go under 150, then you just need to check the guidelines. Coin wants a 1.25 DSCR under 150, and then Coin X, they're actually going to want 1.5 if it's those lower loan amounts. One perk that we actually changed with Coin is that it will do rural up to 5 acres, and that actually is huge. There's not a lot of investors out there who will do that. We have that program. Coin X is unique in that it goes up to 8 units. So that is awesome. That's a huge perk with that. Coin does not allow condotels or mixed use, but Coin X will allow condotels and mixed use. On a condotel, make sure it has a bedroom. That is one of our guideline requirements. It can't be like a studio hotel room looking thing where everything is together. It does have to have a legitimate bedroom, and it has to have full-size appliances. So we need a full-size fridge, full-size oven, stove, not like a mini fridge. And modular is okay for both, but no manufactured homes on these. And non-warrantable condos are allowed. If you have one, shoot me over the situation and we'll see if it meets guidelines. Speaking of appraisals and properties, we actually make appraisals very easy. Some of you may be familiar with our system already. We have over 15 AMCs that we're signed up with. You guys don't have to be signed up with them because we're the lender on the appraisal. So no specific sign up required. They automatically pull in and task to the underwriter. So they're probably going to be reviewed and cleared before you even knew that it was back. We order all of the revisions and corrections for you. If you order through our portal, and we can send the borrower, you can send the borrower a payment link. So if you have somebody, it's easier just to order it with the credit card. But if you have somebody who doesn't want to share that information with you, you can order it deferring payment and then send the borrower a link to process the payment on their side. So our Coin DSCR, these are the guidelines here on your screen. And you will see that with a 640 on purchase and rate and term, you can go all the way up to 80% if the DSCR is over 1. 80% is our max. And then there's no minimum DSCR on Coin X, but the regular Coin does have a minimum DSCR of 0.85. That's listed here. I also want to point out that something unique about DSCR loans is the delayed financing is actually treated as a rate and term. So you may say, what is delayed financing? That is when somebody purchases a home in cash without financing, and then maybe they just need to close fast, so they close in cash, but then after closing they want to turn around and recoup some of those funds. That is called delayed financing. And with regular conventional, that would be treated as a cash out, but with DSCR, that's actually treated, we put it in here as a rate and term, which is nice. So the purchase would have had to been arm's length if you're looking for no seasoning on those after closing, and with no financing acquired, we'd also have to source the funds. And for the LTV, we're going to use the lower of what they bought it for, or the current appraisal under our coin DSCR program. Also, cash out. You can see that we can go to these high limits on cash out, but as far as cash back in hand, that they're getting in hand at closing, these are the limits that I'm putting up on the screen. So up to $750,000, they can get back cash in hand. So CoinX, that's our other DSCR program, different investor, a little bit different parameters that I'm putting up on your screen. This is the one that has no minimum DSCR ratios. So we can go down to, 0%, potentially 0.01. I haven't seen that yet, but we can do it. Cash out can be used as reserves to satisfy the reserve requirements, and a little bit different delayed financing on this. We can actually use this one's the lower of the current appraised value or purchase price plus improvements if you're doing delayed financing. Also, we can do foreign nationals on our DSCR programs. I'm putting the LTVs for foreign national up on the screen now. I want to clarify what is considered a foreign national. This is someone who is living and working outside of the United States. This is not for someone, this is not like a ITIN program for somebody who's living here in the US. This is someone who's living and working outside of the US and has either purchasing or refining a investment property in the US. They must provide documentation that they can enter the US, like a passport from their current residence. And we also need a visa or I-797 form. And then the countries that would be ineligible would be the OFAC sanctioned countries. You can actually Google it. It'll pop up a link to check the list if you're not sure. And then they may have, some people have US credit if they're foreign national, a lot of them don't. So if they don't, we're going to need some alternate trade lines, at least 2. And then also if they're signing outside of the US, it has to be notarized by a US embassy or consular official. So what can we use for reserves and what can we use for the down payment and funds to close? So obviously checking and savings for both. Retirement, if it's using it for the down payment, it's going to have to be obviously liquidated. Stocks and bonds, mutual funds, they can use business funds if they're an owner of the company. You can use cash out as reserves. We can do the 1031 exchange on purchases. And this is unique. You can use gift funds from family, even though these are investment properties, for the down payment. Also, seller contributions are allowed up to 3%. So exciting part, we are at the top of Loan Sifter for DSCR pricing. I actually priced these out right before we jumped on the call. So these should be current, but I can't guarantee it, but they unless pricing has changed, this should be current pricing. So when you're logged into our portal, by the way, if you don't know your portal login, email StarHelp, that's StarHelp at orionlending.com. They can reset your password for you. Once you're logged in, you're going to click on Quick Pricer and be sure to click on this button that says, I need cash flow only investor pricing. That is going to take you to the section to fill out the information we need for DSCR. Here I priced a DSCR purchase at 70% just to show you some competitive pricing. And you can see here that we actually have 7.375 paying 0.425 in credit. These are all borrower paid comp loans because they're not subject to TRID. So the comp is not included. You can include our lender fee, which is $17.95 in the pricing when you price it out. I priced a fixed loan here. We also have, so we have 30 and 40-year fixed for DSCR. We have 30 and 40-year interest only. Side note, if you're doing an interest only loan, you actually can use the interest only payment to calculate the DSCR. So instead of doing the PITIA and the DSCR calculation, you would just do the interest only payment there, which is awesome. It makes the DSCR a little higher. And then we have the 5 and 7 year ARMs, and then the interest only on ARMs as well. And then I also wanted to price out a cash out for you guys. So here's the pricing on cash out. It actually is really, really good. It even looks a little better because I lowered the LTV a little bit to 65 instead of the higher LTV I had on the purchase. So really, really good rates. This is the closest to par today. So cash out seasoning, I do want to touch on that just a little bit. Now, we're not talking about delayed financing that we did earlier. This is talking about a true cash out. You need at least 6 months minimum seasoning. You can use the current appraised value between 6 and 12 months if you're only going up to 70% under our coin program. If you're going over 70% up to the max of 75, then we would need 12 months seasoning to use the current appraised value. So you may have noticed on the last screen that you select a prepayment penalty option when you're pricing these. 5 years has the best. So there's 1, 2, 3, 4, and 5. 5 years is going to have the best, but there's 3 different options for what type of prepayment penalty you will select. One is a flat 5% of the outstanding balance. By the way, let me go back and show you where you're selecting that. You're selecting that right here on the quick pricer. So you select the length of the prepayment penalty and then what type. So there's 3 type options. There's the flat 5% of whatever the current outstanding balance is. There's an option that says months interest on the drop down. And what that is it's 80% of 6 months of interest of the original balance. Or you can do a tiered percentage of the outstanding balance, which this little chart gives. So first you're going to select either 1 year, 2 year, 3 year, 4 year, 5 year. So you're going to pick one column here, and then it goes down every year. So if they pay it off in year 1, it'd be 5%. If they pay it off in year 2, 4%, and then it's tiered. It goes down each year. The ones that do have the best pricing are the flat 5% and the tiered. The month's interest option is a little bit, I think when I priced it today, it was like 3/8 worse. So these two with the yellow arrows, those are the best price. And there are certain states that do not allow a prepayment penalty. Those are listed here on the screen. And so you would have to, once you put the zip code into our system, it'll recognize that, and it would be priced with no prepayment penalty. The only time you can do no prepayment penalty on these is if the state does not allow it. That's the only time. Otherwise, you have to choose a prepayment penalty. If you guys are not familiar with our portal, our company spent big bucks on our portal to make it very intuitive. You can literally submit a loan in just a few minutes. Our system is going to calculate the DSCR for you. So you're going to put in the rental income that you think will be on the appraisal when you register it. The underwriter will change it if it comes back different. It calculates the DSCR for you. We're not asking you to do the math. Title fees are going to pull in automatically. It's a service that we pay for our brokers. So it's not fluffing or overinflating the fees. It's just going to pull them in. Again, there are no disclosures on these. So nothing is going out to the borrower. The title fees are really just to get a grasp on funds to close, reserves, that kind of thing. And then also, like I mentioned earlier, if the borrower is wanting to see something, since there's no disclosures, you can print the fee sheet for them in our system, or there's also a cash to close summary that you can print in our system and email to them. If you guys want to set up a time with our help desk to go through a webinar, they do them every Tuesday and Thursday. There'll be other people on the call, but they kind of go through a sample loan. So you can scan the QR codes there on your screen to sign up for. The first one is Tuesday, the second one's Thursday. Our help desk is awesome. They're available by phone or email, but my favorite way to reach them is probably the online chat. So when you're logged into our portal, there'll be a button at the bottom that says Alexa. You can click it. It'll start as automated. We've programmed a lot of commonly asked questions in there. But if the automated chat is not answering your question, there'll always be an option to transfer to a live person from 10 a.m. to 9 p.m. Eastern time. So that's 11 hours a day that they're online, which is pretty cool. One thing you're going to find in our STAR portal is our marketing studio. So once you're logged in, you're going to click on marketing studio at the top right. We've got all kinds of flyers in there. The screenshots that I took, they are saying Orion, because that's the company that I work for. But when you log in, you're going to import your company logo, your picture if you want it on there, your contact information, and it will be your branding, not ours. All of this is pre-designed. And there is for all programs, by the way, not just DSCR. So the examples that you're seeing on your screen right now is like our down payment assistance and manufactured homes, but we have them for DSCR as well. It's all pre-designed, but it's fully customizable. You guys can change the images. There's over 1 million copyright-free images in there. There's social media posts, LinkedIn, Facebook banners, all kinds of stuff. So definitely jump in and check that out. It's a really good tool. And all fully customizable as well. There's even listings and just listed and brochures and packets and all kinds. You got to get in there and check it out. It's really cool. So I do want to take a minute to answer any questions you guys may have on DSCR. You can type them into the Q&A. I know Michelle's been jumping in and answering a lot of questions, so she may have answered everything. If you're not signed up with Orion, email me, I'll send you our package. Or if you're not approved to do DSCR with Orion yet, you'll learn that when you try to upload one, it'll say that your company's not set up. That would be just because we need an addendum to the broker package. It's just one form that you sign on business purpose. So if you need that done, shoot me an email. I'll send it back to you. We can turn you on for that within 24 hours. If you need your password reset, that email is at the bottom of the screen here, starhelp@orionlending.com. So I do want to take a moment to answer any questions that you guys have on DSCR.